Welcome back to the Ultimate Trader Workshop. In this video, we get to stay in line with our area of interest and our hidden setup series. We're going to be taking a look at an asset similar to how we did with Robinhood last week, but this time it's going to be one of the competitors that's coming up and just released with their IPO earlier in 2025, and that's going to be Webull. So we're going to be dealing with some advanced pattern recognition, this time a pattern that's rare, not well known and hard to identify, and that is the advanced shark pattern. So we don't get a chance to teach on this often because, again, it's so rare, but we happen to have one here on Webull. So we are going to go through the rules of engagement, talk about its probability, talk about the entry, talk about its combined technical score, and everything else that pertains with what you see here. Hit the like button if you haven't so, because I'm pretty sure this is going to be an exciting one and this could help a lot of traders. Also, disclaimer, this is not to be construed as trading advice or a trading signal. This is for educational purposes only. As always, consult with a financial advisor of your choice before putting your capital at risk in these very volatile markets. That being said, let's jump right into it, okay? So, of course, you can see we're dealing with this market that I just plotted out here. This is where our advanced shark pattern is. So, let's start jumping into the rules of engagement. I do want to say it kind of operates like Cypher, like it's kind of like in the member of the Cypher pattern. And if you really want to know more about the advanced shark pattern, we do have a class for that in the Harmonic Trading Academy playlist under module 5 with the rest of the advanced patterns. But let's get to these rules of engagement. So starting to identify the impulse leg or the X to A leg, that would be this swing low here to this swing high. Okay, now the rules of engagement are the same for shark as they are for Cypher, and they stipulate the B leg, okay, after the X to A impulse, the B leg is valid with a minimum 382 retracement, meaning must touch the 382. Okay, the filter is can go as far as the 1618, can touch the 1618, but cannot close beyond the 618. I hope I didn't say 1618. Therefore, you would have a valid B leg here. So even if this was Cypher, that B leg would be valid. Okay, so XA, B leg is valid. Hits the 382, does not close beyond the 618. Those are the requirements. That's why they're rules. Okay, you can't break them of engagement. Now that you have a valid B leg, you'd be looking to validate C leg here that's at the top where this wick area is. And again, it's very similar to Cypher. There is a difference, and I will explain that now. So using the extension tool, the requirement is minimum 1414 extension of X to A. Okay, 1414 minimum. Okay, so minimum must at least touch the 1414. Can go as high as the 1618, okay, but cannot close beyond 1618, okay, meaning your C leg for this shark is valid. The difference with Cypher is Cypher must touch the 127, can go as high as 1414, but cannot close beyond 1414, otherwise invalid. On the shark, closing beyond 1414 is allowed. The only thing that's not allowed is closing beyond 1618, meaning it has a steeper, more extended C leg for the completion. In this case, valid. Now, with that being said, our D leg, which is down here, I'm going to start by talking about Cypher first, and then I'll talk about the actual completion ratio required and the differences. Using the Cypher tool, if I was to start writing this in, right, if I was to bring the Cypher's body on here, right, and let's say we were good for Cypher right around here, okay? The difference is that in Cypher, the D-leg completion must be above X, okay? In Cypher, it cannot be below X. Shark, D-leg completion must be beyond X, okay? Must be beyond X, okay? Otherwise, not valid. And I don't know what you're going to be dealing with if that were the case. The actual ratio, okay, is a 127 inversion of the whole entire left move. There's two things that we want to line up. Kind of how when we do 3-star confluence on Gartley, when we're looking for that 127 extension to A to B, that A to B is equal to CD pattern, and that 786 retracement of X to A. Kind of similar here. So the first thing where you get to D is Fibonacci inversion of the whole entire move C to X, okay? And remember, that's the 127. That's the only number you need for that, okay? So you see our pattern because price action came down so steep, you hit the 127 right there. Okay, you would follow that up with one more filter, but this time using C to B. Inversion, same thing, but the 1618. So we're having the extension coming from C to B and coming back. And then again, this time we want 1618. So I know this looks complicated, people. We're really just performing a couple of measurements. So that's what you need to set on. We needed a couple of numbers. We needed our B leg ratio requirement. We needed to validate our C leg, and we need to validate our D leg. This is very, very close. I wouldn't call it absolute ratio confluence, but it's pretty much locking in that kill zone for you that you would be trading out of. Okay, so that's our beautiful shark pattern completed. I will talk about the entry in just a moment, which is going to be just very, very fun to talk about. But let's go talk about the combined technical score to see if this would have even been probable now that we've done all identification work, our super sharp train reticular identifying something like this. We would go right into CTS, combined technical score, because we want to filter out the good trades from the bad. You want it to have a high enough score, and we do have a class on CTS, combined technical scoring, how to use this system in the Harmonic Trading Academy. I think it might be in like module 2, but either way it goes, you can find it. Just go to the playlist and type in CTS or combined technical score. So here on our shark pattern, excuse me, soon, the first thing that we do is we go right into RSI, okay? And we want to know if this is two things. Is it oversold, and is there bullish divergence? The answer off top is no. It is not oversold, and there's no bullish divergence, telling you that there's enough conviction in terms of the speed of transaction slowing on the selling so that the buyers can come in and start pushing this thing, showing you the crowd, at least on the weekly chart, okay? It's not there. The lowest that we had was a 26, and oversold really is like a 20. Okay, fine, fair enough. And there's no bullish divergence. Okay. What we can do to increase the combined technical score, because right now we're not getting any points. We want those points. We got 3 points for the pattern, and we want at least 2 points for RSI oversold and about 2 points for bullish divergence. That would give us like a CTS score 7, which I consider low, but it's a good starting point. We don't have that yet. There's no reason for me to jump to the week. My RSI divergence, my RSI oversold, overbought condition, and divergence is not going to be there. We're already on the week. There's no reason to go to the month. I'm going to jump from the week to the day and then see what things look like, and that will allow me to also talk about something else. So, good thing is on the day chart, we get it, and there's going to be a few things to talk about here. The day chart, we're good to go. We actually get our oversold condition with bullish divergence. And by bullish divergence, what I mean is that even though it looks like this stuff might be the same, even this wick might even be lower here than this price action over here, the divergence says that even though this looks like it's either sideways or coming down, it's actually going up, which is why you see the price action coming up. The last thing that I wanted to talk about while we're here, mind you, we get our 2 points for our oversold and our divergence. So we've hit our CTS score 7, but we had to use lower time frame confirmation to get it. It would have been great if we could have got it off the daily time frame. Let's talk about how that still might be on the table. So remember, you guys always hear me talking about crowd and conviction, okay? That's what you're looking right here, accumulation, okay? Accumulation. So this, you actually get to see it. Like, you guys gonna understand, it's really about reading the candles. That's why when you see me trading and doing my analysis, you don't see a whole bunch of stuff all over the place. The candles, the chart will actually tell you the story. This section right here tells the story of when price finally got to this area and started to, if you could say, consolidate, but it was actually accumulation. It was accumulating for about 1, 2, 3, 4, 5, 6 days, 7 days, a whole week before boom, pow, breaking up out of that, okay? Now the only thing is it going to be strong enough to become support should price action come back to it or suck back down? Should there be some distribution or some relief? Okay, so I wanted to show you, you guys always hear me talk about accumulation and, you know, crowd and stuff like that. But here I got a chance to actually show you 7 days of just sitting there until enough institutional action had a chance to come push this beyond 854 all the way to 943, almost $1 up. Takes a lot to lift that. Okay, now that that's being done, let's actually talk about the entry, which is of course our favorite part. We're gonna go back to where we are identified our shark pattern. And you guessed it, we have it. 3-bar reversal. Okay, so let's talk about what happened. Remember, looking at the charts, a lot of times these charts will tell us, it will tell the story. It's about being able to look and see reticular reading. Okay, bearish engulfing candle followed by doji. You guys knew what was coming. Okay, bearish engulfing candle followed by doji. Okay, upper and lower shadow, small body. It could be cleaner, but it gives us an even better rejection candle. So it's kind of looking like that dragonfly, kind of like that hammer, but it's still a doji, but a complete rejection on the wick. That's what you want to see. Okay, so you got engulfing candle followed by doji, followed by what should become our trigger and entry candle in 2 hours and 4 minutes. Should this candle not somehow, nothing is guaranteed yet, right? You don't get the confirmation until this closes beyond our doji. And if that happens in 2 hours, then and only then do you have confirmation for a long-term bullish opportunity that should run a couple to several weeks. But this price action cannot come back and suck back down there. It's a holiday weekend, basically a 4-day Thanksgiving holiday weekend with Thursday, today's Friday, Saturday, Sunday. So there's not going to be a lot going on. But if this thing can hold today, if people are not distributing, selling, okay, if that crowd holds, remember when I was on the day chart, I said, once you had that break and close above that accumulation, if that holds and becomes support, then that's what will support the trade and make it strong enough to continue to go on to the targets that we are going to talk about right now. Sorry, this video is a little bit longer than some of them, but you can see the amount of detail and training and teaching that's going into this one. So that being said, let's just clean up a little bit and talk about stops and targets. All right. So typically on something like Shark or Cypher, you're basically using that whole right side C to D. And it's just going to be very, very simple Fibonacci retracement. We bring on the 2 most prominent levels in there, okay? So from C to D, okay? The only 2 numbers we're concerned with, okay, are the 382, which is $11.79, okay? We don't do TP1 or Target 1, taking profit. No, we're not doing that. That's old school, okay? We are in the mode of pyramiding in, buying into the push, getting behind the crowd as they're going, as they really, if this works out long term for Webull, I don't see why not, want to get this thing back up into that $18 and $20 range. You want to be able to get behind that. You don't want to be selling your shares back and being so scared trying to put it in my pocket. They're going to take my money, market this, market that. Okay, what you want to do is at the 382, instead of selling some of your shares back, you want a break and close above it. And then once price comes back to it, say, okay, it held. The market will show you that in some form of continuation at that point. Okay. Now, of course, you would move your stops up. That's how you protect your capital. You move your stops up under it, but do not sell your shares. Allow them to continue to move up as long as you are not stopped out. Once you come around the 618 area, there is going to be some resistance around the 618 because that's usually when the next large set of distribution takes place. Okay, so you're going to monitor that part closely. If you can break and close beyond the 618, allow price action to come. As soon as you're given the next opportunity, you would be buying again to try to go retest C up here. Okay, so even though you can expect a lot of distribution at the 618, which is $14.30. That'd be a major move since this thing was $7. This thing would have doubled in price in a matter of weeks. That's what's possible. That's why I wanted to talk about this. Not saying that that's what's going to happen, but that is just the projection looking at it technically. But can you imagine, let's say price closes around where it is right now? Because now we're just gonna put the risk versus reward tool on there, and let's say we won't even use the top. We'll just retest right after the 618, and then we will just put our stop right up under our low doji. This in itself is almost 2.7 to 1 risk versus reward. Okay, again, you can only get these type of opportunities, stuff that's way better than 1-to-1, 2-to-1 inside of advanced pattern recognition. Okay, so we covered our pattern, we covered our CTS, we covered our entry using a 3-bar reversal if the current weekly closes today in a couple of hours. We did our entry, stops, targets, and our pyramiding in, buying in more with the conviction and getting behind the crowd. So I should have asked that you guys hit the like button before I even got started on this. This could probably really help someone. Okay, hit the like button so the algorithm can do its thing and send this out. Share this video if you know someone who could use help in trading. There's so much more than just the advanced pattern that was in here, or share it with someone who has a liking for advanced pattern recognition and harmonics. We had advanced pattern, structural analysis overall, okay? Again, if you want to know more about the shark pattern, we do have this pattern of full training on it in the Harmonic Trading Academy playlist under Module 5, as well as the rest of everything that we talked about here, all in the Harmonic Trading Academy in one of the different modules. Jump in there, binge watch. This is just maybe not even 1% of what we teach over there. So, think that's all we got. You guys enjoy the rest of your Thanksgiving holiday weekend, Thursday, Friday, Saturday, Sunday. Market should be really moving kind of slow, really not too much to get into. All right, I think that's going to do it for this one. You guys be good. Take care of yourself in the market, and we will see you on the next video.